Hello, everyone. Welcome to the live show. We're back live. How's it going, everyone? Hope you're all well. Hope you're all here. And I see there's a few of you that have arrived already, ready for that day, that live show, mastering swing trading with me. There we go. So it's Thursday. It's already the 5th of December. Everyone's expecting that Santa rally. Well, I can tell you what, we've already had a bit of the Santa rally in Bitcoin. I don't know if you guys noticed that one. Everyone seems to be really happy that for some other reason, the choices that Donald Trump are making are causing Bitcoin to go to the moon. So everyone's excited about that. So how's it, Roy? How's it, Kokoro? How's it, Kevin? I've got a pork pie and a coffee. Wow, cool. You know what? I used to love pork pies. And we could get them at Woolies, and I haven't seen them for a while, to be quite honest with you. I must go and have a look if they've got them again. Yeah, maybe they have. Oh, I must actually go. Now that you made me feel like something like that. I haven't had one for a long time. Do have my coffee, though. Mm. Yeah, but it's gone through 100. Yeah, look at this, man. Wow, 102,869. Probably heading on up to all kinds of strange heights. I saw this in the news earlier on. Crypto is getting the SEC boss it wanted in Paul Atkins. So obviously, this has been an appointment by Donald, and the Bitcoin guys or crypto guys are obviously insanely happy with this whole idea, and it's moving the crypto markets to the upside and making a big difference to them at the end of the day. So obviously the news factor has made this pull up. It's funny because just yesterday I was looking at this and saying it's hit the support, probably going to go up from here, but I didn't want to risk it at 95,000. Yeah, I thought, yeah, let's get a little bit down before we get back in here and take a long. Well, it's gone. There you go. It's hit the 100,000. Now my question this morning was, okay, it's hit the 100,000. Are the buyers going to go, okay, it's hit the 100,000, let's sell out and get out of here now? Or are they going to push on? And it looks to me like they want to push on. Obviously happy about that insane news item. Yeah. Indigenous, how's it? Hi, Rob. Yeah, no, how's it? How are you? Yeah, good. How's it, Eugene? Morning from Canada. Yeah, Canada. There we go. Sure, all over the world. We're all over the world, this community. It's absolutely fantastic to know that in today's day and age, we can chat to each other just about anywhere in the world. Isn't that amazing? It's absolutely brilliant. Today, I'm going to talk to you a little bit about the different types of trading. And I must say, I'm not a crypto guy, as you guys know. I don't trade crypto big time, and I'll trade a market if it's there. And I don't invest in crypto, but I did make a video because somebody asked me about trading spot crypto. And I made a video about that for Friday. Very basic video, very little editing, just to tell you about what it's about and whatnot, because all it is a centralized exchange account. It's the same as you opening a brokerage account and all the rest of it and doing your trading there. And it's no different. It's at the end of the day, everybody seems to think that there's a big difference between all the different types of trading, because you get all tied up in this. Oh, it's 5-minute trading, it's futures, it's day trading, it's swing trading, it's position trading. It's I'm trading Forex, I'm trading indexes, I'm trading commodities. I'm a commodities trader, I'm an index trader, I'm a Forex trader, I'm a crypto trader, whatever. What they're not realizing at the end of the day is it's all the same. It's not about the squiggly lines, as I was saying. It's not about the charts, and that's just a high probability trade. As I always tell you, it's about how you approach your trading and how you approach your risk and how you manage your risk. It makes all the difference at the end of the day. Everybody seems to think that trading different items makes a difference, and it really doesn't. If you're trading, you're trading. All you're doing is looking for a probability of making a profit sometime in the future, whether it be in the 5-minute future or the 5-year future, really doesn't matter. You're trying to make a profit in the future, and that's the high probability of your trade, whether it be short, whether it be long, doesn't matter what you're betting on. Your idea is to make a profit in the near future with whatever you're trading, whether it be commodities, whether it be crypto, whether it be indexes, it doesn't matter. So you have to realize that all it is you're trading against other buyers and sellers. You're trading against other people in the market, and you're looking to take a profit out of the market. It's not much different than to flipping houses or flipping cars or whatever the case, in the sense of you're just trying to make a profit out of what you've got at the end of the day. Even if you invest in shares, that's my sideline, investing in. I invest in shares and I leave them there forever and they grow. I'm looking to make a profit at some time in the future, and that's what it's all about at the end of the day. And the sooner people realize that it makes no difference as what you trade as long as the market's made for you, then you start realizing that it's not about all these fancy terminologies and all these fancy shortcuts and all these fancy names and all the rest of it. That's just to baffle you into believing something that actually doesn't exist. Anyway, so hi, Rob from Birmingham. Birmingham, there we go. Welcome, good to have you. Spot crypto is the only thing that gives me a decent risk reward on a small account. Yeah, no, that's great. And like I said to you, now it really doesn't matter what you trade, as long as you approach it with the same rules. At the end of the day, doesn't matter. Doesn't matter if you're trading spot crypto, if you're trading crypto, if you're trading futures contracts. It honestly totally doesn't matter. You just got to approach everything with the same idea. Look, the difference between, say, crypto and Forex is very cyclical. It goes up and down, up and down, up and down, whereas everybody's kind of expecting their crypto, for example, a Bitcoin, to go to the moon and keep on going. They're not expecting it to go up and down and be cyclical. Commodities also, if you understand commodities, they're cyclical. They go up and down. They don't just go up. Whereas indexes, they're not cyclical. They tend to go to the upside. They tend to filter to the upside, and here's shows ongoing cuts in consumer industrial manufacturing. That's just a news item. Okay, that's cool. So like indexes just keep on going up. If you look at the S&P over the last 100 years, it just keeps on going up. If you'd invested in it 100 years ago, you'd probably be Bill Gates or something. Anyway, Warren Buffett, something like that. I have some crypto just because I wanted to spread out my portfolio, and want to be honest, it's doing quite well just now. Yeah, it should be. I mean, if I look at what crypto is doing, you should be doing pretty well right now if you were long and you bought it earlier on. But I mean, that said, it's all relative at the end of the day. For example, Nvidia. I mean, that's done pretty well as an investment for me. I'm not complaining. So, whatever you bought, does it really matter as long as it's done well? It's much of a muchness to think that crypto did better than shares or whatever. It just depends what you bought at the end of the day. That's all. Also have investments purely to spread my portfolio, and that's the right way to do it, Kevin. Spread your portfolio. I just don't invest in crypto because I don't believe it's an investment product. I believe in it as a trading product because they've made a market, but I just don't believe in it as an investment product. I just can't see the investment in it. For me, it just looks like fresh air, and it doesn't look like something I want to invest in. So I'd rather take the money that I would invest in crypto and invest it in Nvidia or Tesla or something like that, McDonald's, Coca-Cola, whatever. That's better for me. Sorry to say. But yeah, no, I don't spread it into crypto. But my crypto, I do trade it. Obviously, it's tradable. Why not? And it's the same as Forex. I mean, I don't invest in Forex. I trade it. It's tradable. So that's what it's for. It's not for anything other than that at the end of the day. So there's no difference in the trading types and it's just how you approach your trading that makes all the difference. Like, how do I trade spot crypto? Well, the same way you trade anything else, really. You just approach it the same way. What you're going to do, you're going to buy it with a probability of making a profit in the future. All you got to do is look at, for example, like you said here, it gives you a decent risk to reward. And that's what you're looking for, decent risk to reward. And that's what you're looking for at the end of the day. If you get a good, decent risk to reward on anything that you're trading, that's absolutely marvelous. That's absolutely brilliant. So on the news, BlackRock exceptionalism to luxurious stocks. NVIDIA signs AI deal with Vietnamese government, which is probably why it's doing so well. 50 billion investor bets against inflation fears under Trump. There you go. American Eagle stock falls on lowered sales forecast. Yeah, interesting stuff. Some interesting stuff. What's been happening on the markets then? FTSE did look short out of this resistance here, and I was looking at that and thinking, short trade, but it's in structure going to the upside, so you just got to make sure that it does continue on short here. US 500 seems to be off to the moon, getting that Santa rally, and it's going up, so maybe it will keep on going. How far will it go? This year, I don't know how far it's going to go, how far it's going to push. Normally pushes on till about the 15th or the 20th if it's going to give us the rally, so we'll see what happens and how far it goes. The DAX surprised me with this lamp pole formation. It really has shot up to the upside. It is going to hit trend resistance now, so let's just see what happens with that. The France 40 was struggling and holding on down here, but it now seems to have turned around on support, and it's looking to go to the upside. The Nikkei was looking short earlier because it shot all the way back up here, and it did hit this, what was a trend support and is now resistance, and it looks like it's retesting it again. It might come down, and the SA40 is looking rather bullish. Not bad at all, I must say. There is a lot of turmoil in France, and these geopolitics can affect things, eh? And it is a problem with coming up to the weekend if you're long, but you know, the France 40 is long. I mean, you can't deny, if you trade what you see, the France 40 is a long trade from here. But there is a lot of turmoil. Just anything to watch out for, Kevin, is what I see here, is this higher highs, lower highs all the way down here. You see all these lower highs coming down, causing a bit of a bearish trend on the 4-hour, which means it could end its run here. Just be very careful of that, because there is turmoil in France and there is a lot of things going on there. I was actually surprised to see it pull out of here and start pulling up on this support level, but it is, so we have to look at that and accept it. Adriano, hello. Greetings from Kazakhstan. I move here from Poland now. Okay. That's interesting. Very cool, man. Very cool. Yay, DAX, US 100, and S&P 500. Well, if you're long, it's yay, yeah. Yeah, you did see that. You're keeping it. Yeah, just keep an eye on it, you know. It is a bit of a, it's, you can sort of spot it just by looking at it. It's there, and it's in your face, you know, and you're like, you know. Especially if you've taken the trade, you know, the market is a 50-50. But as long as you're managing your risk, you know you're going to win 5, lose 5. It is what it is, you know. But if you see it's not working out, just take the loss, move on to the next one. And, you know, sometimes you see it and you see the picture clearly and you think, wow, this is not going to work for me. And then you move on. The trouble is, it's more painful if it actually does work out and you got out than if you actually took a stop loss. So. Yeah. WTI oil, what I normally do is I do Brent, okay? I don't do the WTI. It's very similar sort of thing, WTI or Brent. Mind you, we can have a look at it on this funded trader account one here, WTI. Same thing, really. There's your WTI. Very much in a range. It's trading in a range, and it's doing exactly the same as Brent. You'll see I've actually analyzed it here. Doing exactly the same, just with different prices, okay? So I'm just going to show you on Brent. I'm not going to redraw everything in here. Very much, this one's on 68.78 and Brent is on 72.29. That's the only difference, okay? But Brent and WTI will follow each other to the T. And what I'm seeing is there's a descending triangle developing here. You see this straight support here. There's a strong support at the bottom here, and there's lower highs coming in all the way down here. There's a trend to the downside. This triangle's developing. So We just have to see if it's going to resolve to the upside. It has to break through either the trend resistance or it has to break down below this support. Either way, so that's when we take our trade. We don't take our trade until this has fallen apart, let's say, and it's moving in the other direction. So if you want to know if it's going long, wait for it to get above the last high and then look for a trade there. Close above the last high or close below the last low and then take a trade from there. And that's how you can trade Brent or WTI at the moment. WTI will be exactly the same. Wait for it to get below the last low, which is what it's 66.43 for a short, or above the last high at 70.68 for a high for a long trade. Precisely the same. Okay, so that's, you're not going to change anything whether it's Brent or WTI. That's what we're looking at on those trades. Natural gas, I don't bother with it much. But if you want to have a look at the spot price, let's have a look. Pretty much bearish. It's dropped off. It's turned around. It's broken structure. I'd say it's going short, and put your levels in, and you're going short on natural gas at the moment. For now, probably down to about these levels here, I'd say. Oh, there's a gap to fill here as well. Nice big gap to fill here as well. So, yeah, natural gas is turning around, breaking structure, moving to the downside. It's gonna have to come down a bit. So yeah, and then there's gold, which is very difficult to call at the moment. It's also creating a bit of a triangle. So we just got to wait and see what actually happens in there. Okay. Soon it will break. I quit WTI to trade duo of that. Okay. You know, this is where we start confusing ourselves, Adriano. Is when we start talking about manipulations and we start talking about how to break this way and that way. And I always try and tell everyone, and it's great. You know, obviously you've got to look out for these things, but how can I put this? Nobody's manipulating the market because they're not big enough to do so. What's actually happening is people are looking for liquidity to buy and sell. And you got to keep it simple, man. You got to keep it simple. Don't get complicated. It's either a buy or it's a sell. It's either hit resistance or it's hit support or it's hit supply, it's hit demand. Doesn't matter what system you're trading with. You just got to approach it the same way. Just manage the risk, manage the loss. It's a 50-50. You know, natural gas, I mean, really, it's just the only manipulation you get from oil and gas and that sort of thing on commodities is you get these guys who sit together and they decide the price of a barrel of oil and that sort of thing. That's not to manipulate markets, that's to manipulate the price as such. That they're selling it for per barrel to whoever, whatever the case, so that they make more money. Scott, hi Rob, are you doing all these on the 4 hour? The reason I trade the 4 hour, Scott, everybody knows me well. The reason I trade the 4 hour is I don't sit and look at charts all day. Well, there's a number of reasons, but the main reason is I can put my trades in and walk away and leave it behind and not worry about it and go and do whatever else I need to do. Leave it, slow trading. It's much easier. There's a lot of guys out there that prefer to trade much faster, or some that prefer to trade on weekly and daily charts and that sort of thing. Some prefer to trade on 5 minutes. But there is one big thing that you all need to know, and one big thing you need to know up front, and that is trading is 50-50. You need to know that trading is risky. You need to know that on swing trading, on 4 hour and day trading and position trading, 60 to 80% of traders do lose money. And if you're 5 minute trading, you'll be shocked to know that 99% of traders lose money trading 5 minute charts. Not immediately, but over time, it ends in tears. Normally ends in tears. There's very, very, very few traders, obviously 1% of traders, that can actually be successful in doing it. And that's because it's not about the system. It's not about the lines. It's about your psychology, it's about your fear, and it's about how you approach markets. And the ability to approach a 5-minute trade is completely different than the ability to approach a 4-hour trade. So there is a massive difference, believe me. And if you look at all my videos which show you the approach and how you must approach trading, you'll see what I'm talking about. It's easy to have a win rate, and a win rate is meaningless. It's easy to have a win rate. It's like a whole bunch of wins and small wins, and then take one big loss. And then you've got a great win rate, but you're sitting in a loss. So it makes no sense, actually, at the end of the day. So, you know, there's a lot of terminology out there that makes you think that trading's easy, and it makes you think that, I can have this win rate, and I'll just have this system, and I'll just win. But if you actually try and follow the system correctly and try and take the wins when they're supposed to be taken and take the losses when they're supposed to be taken, you'll see that the market is actually a 50-50 game. Some of your most profitable traders in the world have got a less than 50% win rate. So just understand that when you're trading. It's not up to me to tell you what to trade, when to trade, what time frame to trade, what system to use. But all I can do is give you the psychological approach, because that's what we're about, on how to approach your trading, how to approach what you're doing on a daily basis. In other words, managing that risk, taking the same stop loss on every single trade, and trying to win at least 5 out of the 10 trades with more profit than you are losing. What are your thoughts on the Forex trendy scanner? You know, Eugene, all I can tell you is great. You know, you're scanning on trends. It's absolutely marvelous. All of these scanners and all of these things work. They're all based on a mathematical equation. They're all based on a system that is designed for you to win. The trouble with AI and robots is it can't pick it for you. It can't see what's going on around you. There's no real life situations. So what I always advise everyone is do your best to learn how to do it yourself. Do your best to learn how to trade manually, not leave it to automation as far as you can. Try and do it as much as possible. Learn to do it yourself. Learn to identify it yourself. If I look at this watch list I've got on the right-hand side here, for example. Now, I don't say that you shouldn't have a scanner or help or, assistance in the market, especially when you're a beginner. You need it. You need the help, okay? But as you go with time, you learn to just put on a chart, look at it, see the picture, and you already know where you're going. And you don't need anyone to tell you any different or give you a scan or whatever the case. You can do it all by yourself. What's nice about AI, especially on the Forex trades, is there are so many different Forex pairs that what these things can do for you is pick out the ones that you're missing out on and you're not watching or you're not seeing, and saying, hey, have a look at this one. Perhaps this one will work for you, which is great. That's the type of thing that Trendy does for you. It'll pick out a trade that you didn't even know was there, and you can go and have a look at it and see for yourself. But make the decision for yourself as to whether you believe that's going to be a good trade for you or not. Randomness is greater the lower time frame because the lower number of pips you're viewing with the candle sizes. You see, what you're saying there is randomness is greater at the lower time frames. And yeah, this is true. It's a bit of a sort of neither here nor there trade, but there are guys out there that can, or girls out there as well, that can look at it and have a little system that they've designed for themselves, which can tell them on a 5-minute chart that they believe it's going to go up or they believe it's going to go down. Doesn't change it from being a 50-50 system like everything else. But what it does become is a more high risk, because the movements will tend to take you out. So for example, if you're trading on a 4-hour, you've got all that space to move up and to move down. You've got all that space available to you, so you can have a look at it. Where's Aussie dollar, US dollar, maybe? You can take a short trade here. You can put your stop loss way up here, and you can put your take profit way down there and leave it and walk away for a few days and see what happens. That's great. Whereas on a 5-minute, it's going to only move 10 pips or 15 pips or whatever the case for you to make the loss or the profit. And that kind of movement occurs all the time. A little bit of somebody says this or somebody says that, and then poof, off it goes. And it is random. If somebody actually just says something or something just slips up, then it moves that way, and 10 to 15 point move is really not a lot, at the end of the day. So you get taken out a lot quicker by a lot of more, as you say, randomness in the market, and there's no real proper direction to it, because just the movement alone, if you just look at a 4-hour chart or an hour chart and you see all these tails, that's movement in the markets. And unless you can apply an average true range or something to your 5-minute, I don't know how that will work for you. That might help, but even then, trying to keep it away from the levels, the volatility, or whatever the case. But even then, I just it's really a tough thing to try and trade 5-minute charts or 1-minute charts accurately and win on a regular basis. You can scalp them, but then scalping never works out because you always end up following the loss. So you never really make a profit at the end of the day. You'll have a win rate, but not really a profit. And I find that the few guys that can handle it have worked out a little system for themselves, but they've got the mentality to go with it. I mean, you've literally got to switch off completely from all forms of fear and emotion. Completely. There can be nothing for you to trade a 5-minute chart and take losses and wins from it, because it is very, very random. I have to say, I have to agree with that. It is very, very, very random. Yeah, pleasure, Scott. Yes, Kevin, that is something, I don't know if I've said it to you guys, but maybe you've understood it when I've said to you that the market is made up of buyers and sellers. Kevin says here, someone has to lose or you would have no market. It's exactly what I've been trying to tell everyone. It's exactly what I've been trying to tell you guys, why it's a 50-50 market. Because somebody has to lose, somebody else to win. It's a market. People are buying and selling from each other with a view to making a profit sometime in the future. Guess what? Everybody's got the best system in the world. Everybody's got a winning system. Everybody knows how to win in the market. Whether it be on 5-minute charts, whether it be on day charts, whether it be on weekly charts, whether it be on 4-hour charts, everybody's got a point of view on which one will make them the most money. Everybody's got their point of view on which system will make them the most money. Everybody's got their point of view on how to trade. The thing is, if you go out there and you look at what people are showing you, there's a lot to learn. There's a lot of information available. And if you can absorb it all and you can put it into your own little package, you can figure it out for yourself, what works for you. That's the best. At the end of the day, it's still just a high probability and it's still a 50-50 trade. And as long as you understand that it's a 50-50 trade, then you can use our psychological approach to make a profit in the market. Our psychological approach is managing your risk, risking 1% on every trade, so on, so on. So you guys know the drill by now. And, when I make a rule like risk 1% on every trade so that you can take 10 trades, you only lose 10% of your account, so that you chase bigger wins and that sort of thing, I'm not saying it has to be 1%. If you feel, hey, listen, you know what? Rob's talking a whole lot of bull. Let's risk 2% per trade. Okay. There's nothing wrong with that as long as you keep it the same. As long as, remember, it's all about your psychology. It's not about the figures. It's not about the actual maths. It's the maths of winning is all in the psychology. It's all about keeping it the same. In other words, you're going to take 10 trades, whether at 1% risk or 2% risk or 0.5% risk per trade, it really doesn't matter. As long as you keep it the same and you try and make more on your wins and lose less on your losses. In other words, don't risk $1,000 to win $500. You're going to lose. You've got to risk $1,000 to win $2,000. Then you're going to win, because the winning trades are going to pay you back. The losing trades are going to be less than your winning trades. And that's the whole point. And then when you go into a losing trade and it doesn't look like it's going to work out, then you can get out early. When you go into a winning trade and it's winning early, don't get out, follow it with your stop loss, and try and take as much as you can out of the trade. You know, too many people are quick to jump out of the winning trades and hold the losing trades forever. And hold the losing trades and add to them and dollar cost average and I don't know what else. Eugene, thank you, Rob. I totally agree. That's my plan and that's why I'm here. Absolutely. That's absolutely what I want to hear. I don't like EA at MT5 and this AI crap. I have Algo Pro and don't use it. Okay, no, look, I don't know if you've noticed. I trade MetaTrader 5. Okay. Look, I use TradingView to show you guys and whatnot. My main trading is on MetaTrader 5. There's so many algorithmic and different trading things available on that platform that you can get involved in and let it trade for you. And as Adriana says, you honestly need to figure it out for yourself if you ever want to become a good trader, because at the end of the day, it does take the psychology out of your trading. I get that. That is true. But at the end of the day, you're never going to be a good trader and you're never going to get your head around it and you're never going to get your psychology around it. And the trouble with AI is if things go drastically wrong, then they are really going to go drastically wrong for you because you're letting a robot do your trading for you. You know, you need to see when things are happening in the market. You have to get a kind of a gut feel for it. You'll be surprised how often in the markets you'll do something on a gut feel. And I'm not against that at all because I do it all the time. I look at something, I see a picture, and, you know, when you've been doing it as long as I have, you know, your eye spots something and says, you know, your subconscious almost says to you, I've seen this before and I know what's going to happen next. I've heard all these stories. I've heard all this. And there's a memory in the back of my mind telling me, hey, listen, this is what's going to happen next here. And then that gut feel kicks in. Sometimes you just got to go with that gut feel. And the AI is not going to do that for you. The AI is never going to do that for you. It's only going to trade on a mathematical equation and what it sees. And like I said to you before, squiggly lines are not what you're trading with. That's not what's making you the money. You are trading against other traders like me. Okay, just pointing that out. So, so yeah, certainly. Eugene, Denny, thanks so much. Online, you have to be careful. Yeah. Forget about the winning, just trade and keep your stops tight and affordable. It's 50-50. You see, that's what I try to tell you guys is, you know, just keep the psychology. And as long as you keep your head and you understand that the lines are just there to give you the high probability. What you're looking for is what happened in the past, might happen again in the near future. And that's what you want. And then also, you know, you see a news event, you see something in the news and the SEC boss, crypto gets the SEC boss it wanted. Now, what do you read into that? If you're trading crypto, you should know that, you know, in the back of your mind and subconscious, you should work that out as, oh, you know what? That's probably going to be really positive for crypto. That's probably going to be amazing for crypto. Should come up in your mind. And what is it? And that's something that AI won't pick up, ever. Now, that's your gut feel. You spot it in the corner of your eye on the news, and you think, maybe, and there you go. So, that comes with years and years and years of experience, picking that up, reading between the lines, seeing things that are happening. Because, like I say, you're trading against other people. You're trading against what people are buying and selling and the reasons they're buying and selling for. I don't trade on the news that much, and I don't hang my hat on it anymore because I used to. But I do listen out for things like that. I do listen out for information that pops up and might be of interest to me. Big geopolitical information like, crypto gets the SEC guy that they wanted. That's good information. Or this bank is going bankrupt on Friday afternoon. Let me sell everything. You just know that you've seen it all before. And these are important things to understand. Trade of the day today was the Aussie dollar, US dollar short. Aussie dollar, US dollar short. And it hasn't done anything yet, but I was hoping it would. But yeah, Aussie dollar, US dollar short. I was hoping for it to get to about 64.50. And then you can go short on it. But I was calling that short today. Yesterday's trade of the day has turned against us a bit, and that was US dollar, Japanese yen. It was in the positive, and now it's gone into red again. But I'm not too concerned. You see what it's doing here in structure, back up, retest, come back down again, hopefully. And look, if it breaks through there, then stop loss. But, trading's a 50-50 game. But this was something I was looking at, some playing around with. I think it's on the funded account as well. We got that trade. Let's just see. It's basically the only trade we got there. And that's also in the red. But yeah, you see there that there's also a trend sort of resistance there as well. So not too concerned about that. Losing a whole $17 on the funded account, and this one's 138. Okay, so that was trade of the day. Aussie dollar, US dollar, there, you're down there. Aussie dollar, US dollar. I wanted to trade some more of these, Euro, Japanese yen, and Great British Pound, Japanese yen at 191. This was another trade of the day. British Pound, Japanese yen, 191. A short, just need a red candle here. Can take this one short as well. It's also going to fall over. It's also in. You see, look at the structure. Structure, down, structure, down, structure, down. Should go down from here. But we'll see. You never know. But yeah, I would say you could take a short trade on Great British Pound, Japanese yen as well. Probably going to turn around and go down. And then the Nikkei, I'm not comfortable with that going long either. It's gone all the way back up here, but it's kind of hit this area, and it might probably fall over and go to the downside as well. But let's just see what goes down with that one. It might just be buoyant because of all these others that have been buoyant as well. Even the France 40 is probably buoyant because of all these other indexes being buoyant, because France on its own, I don't think can hold this up. They're having a lot of problems there, so geopolitics can be a problem. Yeah. So Adriano, just while you said and Japanese yen pairs, you'll notice, there's your US dollar, Japanese yen. I'm feeling short on that. Okay, so we take a short trade. Now, you could also take a trade on Euro, Japanese yen, and you could also take a trade on Great British Pound, Japanese yen, but you're kind of overlapping the trade if it's the Japanese yen that's affecting the market, not the US dollar. If it's the US dollar, then you can play around with Great British Pound and Euro, etc. But you're kind of overlapping your trades. So in other words, instead of having one trade on the Japanese yen, now you've got 3-4 trades on the Japanese yen, which means if the Japanese yen goes against you, all your trades go against you. And the whole principle of trading is to try and balance it. Try and balance it out so that if you take 10 trades, you've got a possibility of winning 5 and maybe losing 5, but not because they're all the same trades. There's no point in having all the trades the same, because if the Japanese yen goes pear-shaped either way against you, then you kind of end up in a situation where all your trades lose then you can actually lose 10 trades at one time. So just be careful of that. I just noticed you saying that, and all the Japanese yen pairs. Don't trade all of them at the same time, you know? Hey, two, yeah, whatever, but don't trade all of them at the same time. It's like Euro, US dollar, Great British Pound, US dollar, and another US dollar trade, and you trade them all at the same time. And if the US dollar goes against you, then you lose all those trades at the same time. So, and it's maybe one of the reasons I also don't only trade Forex. I also trade commodities. I also trade index, and I'll even have a good old shot at the crypto from time to time. So that's why just split yourself up a little bit and give yourself the opportunity to have wins as well as losses. Okay. I've just been doing this for about 3 months. So I started with demo account, and I've had a live account for a month with just £1,000. I have 4 live trades now, just dropping my toe in slowly. Yes, I would, Kevin, go in slow, take it slow, because it's real money and it's not like the demo. And you will attest to the fact that it's not like demo, is it? There's a big difference, isn't there? You'll feel it. So yeah, dip your toes in, get the feel for it, trade lightly, and risk what you can afford and you can sleep with at night. You know, if you can't sleep and there's a trade running, you've traded too much. Yeah, that's as simple as it gets. That's how I measure it. I measure my risk aversion by my fear. So if I've got a trade in and I can't get it out of my mind and I can't sleep about it, I'm worried about it all the time. I keep on checking my phone while I'm out shopping, and then I know I've traded too heavy. I've traded too much. I've put too much in, and I need to back off and change my risk structure. That's how I know what risk I can handle. That's the best way to do it. Measure your risk. Once you go in too heavy, you'll know you've gone in too heavy. You can push it a little bit, push the envelope. You can say, all right, I want to push it a little bit now, and then see how you feel, and then see if that's okay with you, and then push it a bit more and so on. But don't go like, I'm risking $1,000, and then tomorrow, because I'm winning, I'm risking $2,000 because I'm overconfident. You'll know when you've risked too much. Yeah, just JPY 1 bit trade, and same to EU, US dollar, and GPUs. They're the same, but not really. Yeah, no, that's great. No, that you got to look at balance. You know, just look at the balance, Adriano. That's what I do. I look at the balance, and I'll take more than one US dollar trade. Don't get me wrong. I'll take 3, but if it looks, for example, for me, the Euro US dollar and Great British Pound US dollar together is pretty much the same trade, but the Euro US dollar and the US dollar Canadian dollar is kind of 2 totally different trades. And so I'll look at that. And then the Aussie dollar, US dollar, I'll kind of look at that. But, you know, you can also base it back all to the Dixie and just see what that's doing. And it'll give you a good idea, a good run on what's happening on all these other trades. But I will take more than one US dollar trade, because most of them are US dollar. And then I will look at, you know, that scenario where I can get some different trades in. I'm just saying, you know, don't end up basing all your trades on one currency, because if it does turn against you, it can get quite tricky. Okay, so I lost 200 at the start, which put me off, but I've stuck at it and I'm up 18 now. Yeah, you see, that's what's the difficulty when you start out with real money and the first trade you take, it hits you. You take a loss. That's probably the most difficult loss, that first loss. And if it's your first trade with real money, that's even worse. I know the feeling, Kevin. Don't worry. We've all been there. We've all been there. Just keep it light. Make sure you can sleep on it, and you'll get it round. You'll get around it. You'll get around it. Goro, yeah, good on you, Kevin. I'm still waiting. Can't open one yet. When you do, you'll understand the feeling, and I know what Kevin's going through. We all go through it. Yeah. You see, Kevin said, yeah, no big difference when you trading your own money. Like I said, the best way to measure it, Kevin, is you'll feel it in the heart. You'll feel it in the mind. That's what I'm trying to teach you guys at the end of the day, or show you guys at the end of the day, is the psychology of trading, not the squiggly lines. The squiggly lines are meaningless. People go on courses and they come back from the courses and I'll take the world on because I've done this course that I paid, I don't know, thousands of dollars for. And they come back and they know everything about trading and all the terminology and all the little abbreviations and everything. And they're teaching me things. I mean, I'm like, wow, Zach really knows what he's talking about. Puts real money in the market, meltdown. That's what it's about. It's the psychology of trading. That meltdown when you put real money in. Whew, that's the difference, guys. That's the big difference. Scott, I'm right here with you, Kevin. Just getting started out. Haven't dipped my toes yet. Yeah, you'll all dip your toes. Don't you worry. You'll all dip your toes, and that's when you'll feel the difference. And that's when you're going to say, Rob, where are you? Help me here. Yeah, that's the thing. It's that psychology. And then you're going to remember what I told you about the risk and how to manage it and how to work out how much to trade, the size of your trades. Trading all currencies that are JPY pairs at the same time is called a portfolio risk. I got caught out this morning. Okay, that's cool. No, all right. No, I didn't know they had a name for it. I'm just pointing out to you guys that don't do that. That's not going to help you. Looking at Aussie dollar, US dollar, a major support around 64.35. Could this pair be turning bullish? Certainly not, David. Definitely not. That's why I called it short. You see, look at that. Okay. While it's struggling to get through here, it's pushed in how many times? Quite a few times into the support level. It has actually broken through. And the more times it hits this, the more chance it's got of breaking down. And it's in a very bearish trend all the way down. I have got the right pair, right? Aussie dollar, US dollar, yeah. It's all the way down. And you see all the way down here as well. So what it's doing, it's going back up to trend resistance and continuing on in its pattern. It hasn't broken structure. It's in the structure. The structure is, the trend is to the downside and it's going down. All I'm doing with this trade is trading with the trend. That's all. Nothing else. And if it fails, then you put a risk in place. You have to be able to switch off from your trades if you've got real money, guys. Just remember that. So yeah, no, David, I'm not bullish on this at all. You'll see it's trade of the day for me, short. And if I'm wrong, sorry. That happens, yeah. That's Okoro. Do you have a demo account? Crafter Voice, what's your view on US dollar JPY? I'm selling. Yeah, well, exactly. I'm short, but I'm losing, but I'm short. Yeah. Okay. US dollar JPY short. Why am I short? Yeah, you asked what's my view. Of course you're selling because look at this. It's bearish. There's your head and shoulders. There it's come down in structure, up, down, up, down, up. What's the next move? To the downside. It's gone up, down. Okay, it's come back up to test and it's going down. It's basically broken through the support, gone back up, tested the support, and now it's going down. The fact that we've got a little bit of a green day or a little bit of a green bar here really doesn't make a hell of a difference to me. That's why my stop loss is up there, way far away from this level. If it gets up there, then yeah, I've made a mistake. It's invalid, of course. But if it's here, it's in structure, staying in structure, and if you just measure that distance back up to the retest, I mean, that is so in structure. And, you know, it's just saying, screaming at me, sell this short, which is what we've done, sold it short, and it's going to go down in structure and carry on in its trend. That's my feeling on it. And that's from Crafter Voice. David, you may have discussed this pair. I joined late. Oh yeah, no, look, somebody asked me what's the trade of the day. Sorry, David, and I just mentioned it. Don't worry, that's fine. But yeah, I'm calling it short at the moment. Kevin, I keep a close eye on my stop losses and I sleep well, and that's the point. If you're sleeping well, you're risking the right amount of money. Simple. When you stop sleeping and you start checking your phone every 5 minutes and you can't get away from that trade and you're constantly worried about it, then you've risked too much. But in the beginning, I don't think it matters how much you trade. I wouldn't know because it's such a long time ago when it was at the beginning for me. We didn't have demo accounts when I started out. It was all real. But I have to say that, you know, in the very beginning, it's a long time ago. But I think no matter how much you trade, it kind of affects your mind because it's real money. I do been trading with it for about a year now. Big wins, big losses, but tweaking it in the right direction. Start with a demo account, everyone. It's great to learn that way. Yeah, that's the way to learn. And then you learn the systems, and then you have to learn how to trade. It's actually funny because you learn the systems with your demos, right? You learn the systems and you get to know the system. But then when you put real money in, you effectively have to learn to trade all over again. Amazing how difficult it is to press the button when it's real money. Okay, it becomes completely different. Morning, Luigi. Louis, yeah, how's it? Easier to see the head and shoulder pattern with a line chart. Yes, but because it's inbuilt in my head, I can kind of see it. There's a shoulder, there's a head, there's a shoulder. It just, I see them all over the place. I see them in my sleep. I don't need a line chart. I can actually see it. But yeah, the reason I use line charts is for closing prices, obviously. So you put it on a line chart, you got your closing prices and you can see where your levels are. That's the only reason I use a line chart. But I use the candles because I like to see the green and the red candles as to what's going up and what's going down on any particular hour or day or whatever the case. Craft always makes sense. Yeah, totally. There you go. What do you think about gold? Yes, I've been talking about gold, and I have to tell you that gold. I actually can't give you an answer right now because I'm looking at gold. My gut feel is bearish. My gut feel is downside. But then you're going on my gut feel. And that's the problem because what I'm seeing here is this heavy triangular pattern developing. And it's not even weighted to any one side. It's just going into this narrow range and it's not going anywhere. It's undecided. It's very, very undecided. What that means is that all the buyers and sellers are undecided as to where this is going. It's got no real direction. But if I look at it and I look at the pattern and I look at what I'm seeing here, I'm seeing short. I'm not seeing long at the moment. The trouble with gold is it can surprise you. A little bit of geopolitics, a little bit of this, that, and the other, and boof, it goes to the upside because it's a safe haven trade, or it's supposed to be anyway. And then, or the world just goes really great, and off she goes. It will crash to the downside. So, just I couldn't possibly give you an answer right now as to which way this is going to go, apart from my gut feel. If somebody said to me, Rob, you have to take a trade in the next 5 minutes on gold, I'd take a short. But I could be wrong. Very 50-50 this. There's just no high probability for me here that says to me, oh, this is definitely going to go this way or that way, simply because of this development here. This is kind of like a little development. You see that for me is just it's going into this little area here. It's much closer to your bottom side, and if it breaks through here, it'll probably go quite far down, maybe all the way down to these 25s, 2480s. If it breaks through here, if it breaks to the upside, then you're going to get the upside again, and it'll go to this top level. But at the moment, it's so close to this bottom side of this little triangle that's developing here, this narrow range. It looks to me that it'll probably go to the downside. Just my feeling on gold. Okay, just like I said, totally gut feel. Okay. You say gold looks like a pennant pattern. Yeah, could be a pennant. Could be a pennant. But it's a very sort of short pennant there. But yeah, pennants resolve to the downside as well. So same thing. If it's a pennant, then it's going to resolve to the downside as well. Yeah, it could be a pennant, but it's not a very clear one, but it's there. Yeah. Okay. That's the same pattern I got. Yeah. Okay. So I think gold might just be bullish. You never know. I think you have to trade so much to the point that you'll blindly trust your strategy. You know, you don't blindly trust it, but yeah, you have to trust it. You have to look at it and say, that's what's going to happen next. You know, it's just patterns. You know what actually happens if you've been trading as long as someone like me? You just look at something, you look at a pattern, and it looks familiar in your subconscious, like I said, and you get a gut feel for things. And sometimes you're right, sometimes you're wrong, but yeah, you just look at that picture and you say, well, I've seen that picture before. And it's not exact, but it's just there, and it's just saying to you, you know, this could happen next. Just a feeling. Okay, Great British Pound, US dollar. Do we see an inverse head and shoulders indication upward direction? That's what I was thinking, Henry. I was thinking euro and Great British Pound, US dollar, because if you look at the Dixie, look at the head and shoulders on the Dixie, right? So your inverse head and shoulders is a actual head and shoulders on the Dixie. And if you look at the euro US dollar, you are getting the inverse. And if you look at the Great British Pound US dollar, you are getting the inverse. So if it goes above that high over there, which is at 127.50, 127.49, 127.50, goes above that, it's a head and shoulder, inverse head and shoulders, and it's gone. Long trade. Totally. I was looking at it this morning, and you know, if you're looking at the Dixie, you've got the normal head and shoulders, which hasn't played out yet. The euro, same thing. Great British Pound, same thing. Just remember, it's not in effect until it plays, and it only plays when it goes above that last high there. Then it plays out, but then it'll probably go. So that is true. You're quite right, Henry. We have an inverse head and shoulder pattern. So that'll give us a run to about, let me look at that distance, to about here, which makes sense, probably 129. Probably give us a run to about 129. If you want to take it now, you could go for it. It's early though. It's an early trade. That's anything, you know, you're getting into early. I tend to do that sometimes. I get in too early and then poof, see my butt. Yeah. Totally agree with you, Henry. That's a head and shoulders. Okay, so you guys want to go long on gold. I want to go short on gold. Yep. We'll see. We'll see which way it goes. I'm not sure. I really am not sure. Yeah, you got this here, but you see how it's running along the bottom here? I don't know. You can't trade BTC on trading 2-on-2, so you need another broker. Bit of a shame there, Kevin. What you can do is, if you want to stay with that broker, but it's irritating. You know, you could open one of those centralized exchange accounts and do the spot crypto trading on the side. But then you've got to put money in that account, and it's a real pain. It's funny because most brokers offer the coin or the crypto on their platforms as well as everything else. But yeah, everyone to their own, I suppose. I guess trading 2-on-2 is just not into that. I think it's long, but it's also hard to say at the moment. Exactly, that's what I'm saying to you. It's hard to say. I can't tell you if it's long or short. Just my gut feel says short. Your gut feel says long. Exactly. That's traders. You know, two traders sitting in the same room will often not have the same opinion, and we're trading the same system. Do you see how that works? It's all in the psychology. At the end of the day, the market's 50-50. There's no two traders that will sit together and, even on the same system, agree on which way something's going to go. But if something's 50-50 like that, I'd rather not trade it because it's 50-50. There's no clear direction. So there's lots of other things to trade. I'll go and trade those until that thing gives me a clear direction. When it gives me a more clear direction, then I'll take a trade. And that's the whole point of the system, not the strategy. The system, the high probability system, is there to give you a sort of an idea as to where things might go next. And to get that, things have to play out. For example, the head and shoulders on this Great British Pound US dollar. You know, you're not sure yet, but if that goes above that high, it's almost a slam dunk. And you're like, okay, that's a trade. Now you're looking at a trade. Or when the green candle comes out of support, that's a trade. You know, you're looking at a trade. Whereas here, you're kind of looking at neither here nor there. Both of us are thinking, one's thinking long, the other's thinking short. And there's a good reason for that. This is an indecision by many traders, not just you and me, by millions of traders out there who are not sure which way this is going to go. That's why it's sitting here. That's why it hasn't taken direction. That's why it's narrowing into this point. It's because there's millions and millions of traders that just can't decide which way this is going to go. That's why it's like that. So don't feel like, oh, you know, that's straight. No, that's exactly what it is. So many people don't know which way it's going to go. And that's what I always try and tell you guys. We're trading as human beings. We're not trading as squiggly lines. This is all the human beings out there going, I wonder which way that's going to go. Take note of one thing, though. We were talking about head and shoulders. There's a shoulder. There's a head. There's another shoulder. If that comes down here, ooh, tricky. Okay, just to say. Okay, I've been long on gold for the past 4 hours, waiting to see a break one way or the other. Good day from Australia, Mr. Wilson. So you see, there you go. You got someone else that's calling gold long, and while I'm feeling short on it. So there you go. That's just how the market goes. And as I said to you, millions of traders don't know which way gold is going to go at the moment. But here's another gut feel with my subconscious is probably picking up this big head and shoulders on gold and saying to me, oh, Rob, don't go long on that, dude, because, you know, you don't know. Yeah, but you guys make the choice. I don't tell you which way to trade, that's for sure. That'll be my next headache. Which brokerage? Just choose one that's in your country, choose one that's close to you, choose one that you've got access to, choose one that's been around for a few years, you know. And these days, I'm not really happy about all these online brokers and all the stuff that's online and that. I'd prefer to have a real broker, but yeah, see what you can find. I like the look of TradingView. It looks better than 2-on-2. Look, TradingView is a platform, and then the brokers trade on TradingView. So, for example, even this funded trader account, this is trading on TradingView. TradingView is just the platform. What you need is a brokerage account like Black Bull or GT247, IG, you know, someone like that, that you trade some decent instruments. Best way to do it is to go and open a demo account with those brokers and just see what instruments they offer. And then you normally can tell what they've got. And if you like what they've got to offer, then you can contact them and say, okay, what kind of deal can they offer you to open an account there? That's cool. It feels like once it decides where it wants to go, it'll make a huge move. And absolutely, it will. Totally. I mean, like I said to you, if it breaks that way, it's gone. If it breaks this way, it's gone. But I think if it breaks this way, it's gone more so because of the size of that head as well. And, you know, just if it breaks to the downside, it's going to break heavy. If it breaks the upside, it'll probably go to the highs, which is the 28 level. But I just get the feeling it's going to break to the downside. I would hold on gold and be patient and see where it breaks out to. Exactly, Kevin. That's what I've been saying now. It's very undecided. Hold on it. Let's see which way it decides to go. Look for the candle, and then you can take the direction. Once it breaks out, you can take the actual direction. No, Mr. Wilson, Bitcoin at record high does not mean gold is surely going long. I don't know why everyone seems to think that Bitcoin is pegged to gold. It's not. It's crypto, okay? And crypto is not pegged to gold in any way, shape, or form. It just feels that way sometimes, but it's not pegged to gold. What you're looking at is the movements because your Bitcoin is pegged to the US dollar and gold is pegged to the US dollar. So if gold moves with the US dollar, then Bitcoin might move with the US dollar. But you'll see clearly that Bitcoin didn't move with gold. Bitcoin moved on its own. Why did Bitcoin move on its own? Because if you go to this, crypto is getting the SEC boss it wanted. So crypto is excited because of that. So crypto has made its own move to the upside. It's got nothing to do with gold. But gold moves according to what the dollar's doing. Now, you'll notice the dollar is turning around. So there might be an effect on gold. So peg your gold to the dollar, not to Bitcoin. Just a little bit of information from my side, okay? Just remember, crypto, as I always tell you guys, it doesn't hold an asset value. It's traders against traders, buyers against sellers. There's no asset value to Bitcoin as far as I'm concerned. It's fresh air. Gold is a physical product. It has an asset value. It belongs, okay? It's like an index. It's companies, made up of companies. It holds an asset value. It belongs. So Bitcoin is basically the price is made up by the buyers and sellers. The people that it's valued by the buyers and sellers, what they feel it's worth. The reason it's going up at the moment is they feel that it's going to get a fair deal from the Securities and Exchange, and they're not going to get closed down. Everything's going to go well for them, so they buy more Bitcoin, and they're all quite positive about it. At the end of the day, those are the fundamentals behind trading. Now, I'm not a big player in fundamentals and news and that type of thing, but I understand them and I know what's going on. It's very important over the years to learn a little bit about the fundamentals of things. So don't make the mistake of thinking that Bitcoin is gold. It is not. They are two totally separate, different things. The only thing that they have in the same is that they both trade with a dollar. So if the dollar moves, they'll both move together. And that's what makes people think that they're the same, but they're not. And this move had nothing to do with the dollar. This move had to do with Bitcoin. Therefore, gold moves one way, Bitcoin moves the other way. Gold could crash today, and Bitcoin will still go to the moon because everyone's happy with Bitcoin. Got nothing to do with it. Okay, just my point of view, just a little bit of information. Okay, so maybe it's a bit hard to say right now. The trend looks different on the different time frames. Oh yes, it will. It'll always look different on the different time frames. But the higher the time frame, the more reliable. You go to the 4 hour, go to the day. Okay. How big can I make this now? Make it as big as possible. So your day looks very similar to your 4 hour day chart, most reliable. Okay. Hang on. Let's go to the weekly, man. Let's go to the weekly chart of gold. Because you guys are on about gold, let's have a look at gold. What do you see on the weekly chart? Almost the same, but much narrower. Okay. So we got these three red bars. We've got this green bar that outdid that one. Then we got this red one fell to the bottom, so it looked like it wanted to go long. And now we've got this at the end here. You see that? Okay, that's a indecision at the moment. It's tiny little body with legs on both sides. Complete indecision on the week. And it's trying to push through the bottom leg. So the concern is that that's going to fall through the bottom leg rather than push through the top leg. And on the weekly, it's kind of pushing to the downside as well. So that's why I'm a little bit bearish on this whole picture. Now let's go back to the day. On the day chart, and you get a better picture here as well. Total indecision there. It's like a spinning top. There's total indecision there. Nothing happening. And then these candles are so small as well. If I was to put the volume up here, I'm not going to do that now. The volume will tell me a lot as well. If there's a lot of volume here and nothing happening. But yeah, no, it's... And look at that big red candle, just by the way, guys. Do you see that's a day chart? Look at the size of that red candle down to there. And then consolidation. What's next? Pennant. Down. Okay. So, I know you guys want it to go long, but yeah. Just watch out for that. Watch out for that. Okay. Now I've made these charts all kind of weird sizes. Ooh. I always struggle to get these charts back to size. There we go. Okay. Right. So, that's gold. Okay. US dollar, JPY has started to move the wrong way. It'll come back. Don't worry about it. Just got that confuses me sometimes. Yeah, so Kevin, I hope you saw what I did there when I went up the time frames. Did you notice I didn't go down the time frames? Because down the time frames to the smaller time frames, those time frames are kind of useless for me. Totally useless for me. Those time frames won't help me in the least because they'll make a good sniper entry. If I'm looking for an entry, I'll drop a time frame, hour, half an hour, whatever the case. But when I'm looking for research, I'll go up the time frames because it's more reliable. I'll get more reliable information from the higher time frames than from the lower time frames. So don't drop the time frames. Don't go to lower time frames to do your research. Do your research on the higher time frame, then look for your sniper entry on the lower time frames. And then decide which time frame you're also trading on. So if you're trading on the 4 hour, you can drop to the 1 hour, 30 minutes to get a sniper entry, even the 15 minutes. But decide which time frame you're actually going to be trading on. And then if you want research, go up the time frames. Don't go down the time frames. And you'll notice that when I researched gold now on the day and the weekly, there wasn't a big difference in what we were thinking. There wasn't a big difference in the research. And it actually confirmed what we were saying. It's undecided. It's not sure which way to go. Bit of a spinning top. It's not sure which way it wants to go, up or down. There's millions of buyers and sellers out there going, which way is gold going to go? Okay. All right. Henry, do you agree that trading is super easy? Just needs support and resistance trend lines and risk management? Lol. Okay, Henry, I'm going to answer your question, and I'm going to actually, and most of the guys that know me well are going to laugh at me because I'm going to tell you this. Henry, trading is the easiest thing in the world. But it's like if you go and become a doctor, it takes you 9 years to become a doctor. Yet everybody who becomes a trader reckons this is so easy, I can do this in a day. I can do a course for a day and I'm a professional trader. You're not wrong. Trading's easy. Super easy. Super easy. The problem you've got is it's not about the squiggly lines. It's not about the patterns, and it's not about the support and resistance. I preach support and resistance. I preach price action, and I tell you guys it's easy, okay? You simply take a trade when it hits support and goes up, and you simply take a trade when it hits resistance and goes short. Easy. No, there's nothing difficult about that. It's not rocket science. But now go and put real money in the market and go and try and approach that trade. Go and try and do that trade. And suddenly it becomes a different world. Suddenly it becomes a new world. Suddenly trading starts to become difficult. Now it's not trading that's difficult. It's your psychology and it's your approach to how you're going to make a profit in the market. It's your actual approach to the market that is so difficult to get around because nobody can actually understand that it's not about the charts. It's not about the lines. It's not about going up and down. It's about how you take the maths and you put it in there and you risk a certain amount on each trade and you want to win a certain amount in each trade, obviously win more than you lose, and understand that you're trading on a 50-50 game. Suddenly it becomes difficult. Put real money in the market and suddenly it becomes hugely, immensely difficult to trade. So yeah, it's not difficult. It is easy, support and resistance. But all of you will have noticed, none of you will disagree with me, that it becomes immensely difficult. Something that looks so easy becomes immensely difficult. And when you start trading for real, you start figuring out that these things go in different ways and different directions, and they don't go the way you want them to, and so on and so on. And for example, this trade is losing, right? This trade is losing now. And you guys will be going, oh my goodness, that trade's losing. Oh no, that trade's losing. But if you've been trading for a long time, you look at the picture like I do and you go, oh, that went up there, it went down there, and it went up there, and it went down there, and it's gone up there, it's going down there now, it's just going back up, and it's going to go down. because we know that's what's going to happen next. So I'm not worried about this picture. But for somebody who's trading for the first time or very early in their career, to see that red is immensely stressful. For me, it's meaningless. It doesn't matter. I know the trade's going to play out for me, whether it plays out or not, whatever. I know that I'm going to win 5 and lose 5, and somewhere down the line, I'm going to come out the other end in a good place, because that's how the psychology operates. And once you learn that the psychology works, then this becomes a lot easier. But until that time, it doesn't. Until that time, it becomes immensely difficult to control your emotions. Because it's all about your emotions at the end of the day. It's all about how you control your emotions. It's all about how you control your risk management. So yes, Henry, I've answered your question. Do you agree that trading is super easy? You just need your support and resistance and trend lines. It is, but it's also super difficult. Mr. Wilson, lol, I'm a noob. Pay no attention to me. Only been trading 3 months here to learn as much as possible. Thanks for your info and time. I love your name, Mr. Wilson. Oh, man. No, you're welcome. Totally. I love it. I love it to bits. I love having you guys here, and I love doing these videos, so don't worry about it. Absolutely. Please, please, please comment. And yeah, I'm here to be corrected as well. Totally. Everyone is got their point of view. Just the same as you, Wilson. Looks like you made great progress. Great British Pound, JPY just broke. Might continue buying. If the US dollar JPY is going down, it's going up at the moment. There's a little bit of an up here, but that's in trend and it's going down. Then I just ask you the question, Great British Pound JPY, why are you going long? It hasn't broke anything, actually. Still in structure, still in a bearish structure. There's money here. You see that? There's money here. To take that money and go down. Sorry, I've got an opposing point of view on that one as well. So it might not work out. I might lose, but yeah, that's sorry. Don't continue buying. How far back do you go when you have a chart open and drawing your lines in 4 months all time? How far back do you go when you have a chart open and drawing lines in 4 months all the time? Kevin, generally about 6 months if I can. Okay. I like a year as well. I can go back a year. It gives me a lot of good information. If you're trading on a day or a 4 hour, 6 months to a year, you're good. Okay. That will give you good information. Give you a lot of information on a chart if you want to do research. All right. That's my preference anyway. And if I really want to research something big time, like a share or investment or whatever, I'll go back 5 years. I'll have a look at it. Okay. Accumulation, manipulation, distribution. Just my opinion. Gold is short. Yes, gold is short. Okay, good. Right. Don't play too much into this accumulation, manipulation, distribution thing. Don't play in too much into that. Kokoro, keep it simple. There's a support, there's a resistance, there's a supply, there's a demand, there's a trend. Work with that. Don't overcomplicate it. Don't let them baffle you with distribution, manipulation, and all this stuff. Don't go there. You're just going to confuse yourself, man. Stay simple. Keep it simple. You can have that in the back of your mind if you want, but what you're going to do to yourself is every single time you want to take a trade, all that stuff's going to pop up, and you're going to be like, oh, I can't take this trade because of this, or because of that, or because of this, or because of... Yes, you need information, but you don't want to stop yourself taking a trade. It's like having another trader sitting next to you and saying that's long and you're short, and you're going to be confusing yourself with 1 minute you're long and the next minute you're short. You've got to be able to sort of take that decision, because the market's 50-50, and you won't be able to take that decision if you confuse yourself. And like I said, don't worry about it. It's 50-50. That's just the squiggly line. Just understand the psychology of how you approach your trade, how you take every trade, and how you risk 1% on every single trade, and how you're trying to make more profit than loss. And then you won't worry about all the other stuff. Okay, so it doesn't matter which way it goes or what happens at the end of the day. You're just looking for a high probability trade. So don't worry about all that technical jargon. It's so meaningless. It's unbelievable. People make it up. You actually couldn't make this up when I started trading, to be honest with you. If somebody had told me all this stuff when I started trading, I would have dropped dead and I would never have started trading. But somebody made all this stuff up. Really, no. The markets are, the markets are not different to what they were 30 years ago when I started. They're the same markets. There's buyers and there's sellers, and they buy and sell for the same reasons. But now they've added all this other jargon into it and confused the hell out of everyone. Maybe it's the big institutions that have included all this stuff so that they can get your money. I don't know. But yeah, if you keep it simple, wow, you'd be surprised. Mr. Wilson, my trouble is my losses are larger than my wins. I put stop loss at 1-1 or 2-1, but often close my trades early either way. I hold my losing trades too long sometimes. And you are the classic example of what I always talk about in our trading system. Ask anyone on this platform what I always tell them. Like, yeah, trading is not difficult. It's how money affects your mind. Most top traders say you have to be a good loser. There you go, good loser. Can everyone like the stream for Rob as, yeah, thanks guys, yeah, please like the stream. Good advice, Rob. Done it. Kevin, right, thanks Roy. Mr. Wilson, my trouble is my losses are larger than my wins. Now, what do I always tell you guys? Just what I always say, okay? Win more on your wins and lose less on your losses. And the way to do this, and I'm not sure if you've watched all my videos, Mr. Wilson, and I'm not sure if you've been on my live shows before, but what I will tell you, risk 1% on every trade. So some of us have got $1,000 accounts and some of us have got $100,000 accounts, and those are round figures. You can work out 10% from them or 1% from them quite easily. So a $100,000 account would say you could risk $1,000. So what you do, you risk $1,000 on the trade, okay? On every single trade that you take. So 1% on every single trade. That might be $10. It might be $100. Doesn't matter. Let's say it's 100,000, so that's $1,000 risk, right? Don't change this according to the size of your account or the profit that it makes. Don't change that. Keep it the same. Don't change that. All right. Leave it as $100,000 for as long as you need to. And even if it becomes 200,000, you're still trading a $100,000 account, right? $1,000 risk on every single trade. Then when it goes into profit, well, hopefully this one does because it's in a loss and it might even like wipe me out. But okay. If it goes into a win and it goes, let's say it goes $500-$600 into profit, don't take the profit. And so many of you will always make the excuse that a profit's a profit and, it's in profit, so I'm going to take that profit. And for some other reason, when we're in a profit, if it comes back and takes out a break even, you'll be like, I lost $600. No, you haven't lost anything because you haven't won anything yet. At the moment, this trade's costing you $1,000 because it's your stop loss. If this goes $500-$600 into profit, I'm going to take that stop loss, move it up to cost, break even. That makes the trade completely free. Funny how if you're in a loss, most of you will dollar cost average and add to the trade and stay in the trade forever. But when you're in a win, you'll click out and get out as quickly as you possibly can. Does that feel like you? Right? So the thing to do is when it goes into a profit and it's in a profit and you're excited about it, and I know you want to click out and take the profit because that's what you all want to do. Don't take the profit. Take your stop loss up, move it to break even. And if it makes you feel more comfortable, even $50 into profit so that you at least don't feel bad when it takes it out. Then watch it go further, and then move that stop loss up into profit. Move it up, 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 up. So when it gets to $1,000, now you're at 50-50, 1-to-1. Then you move that profit up to $500. If it goes back and takes it out, you still made a profit. And it keeps on going towards your target, which is down here. And you just keep moving that stop loss up behind it. I would normally recommend adding to the trade, but I'm not even going to do that right now. I'm just going to tell you, just follow the stop loss behind it until it turns around, takes your profit. You've made a profit and you haven't made a loss. Stop doing the opposite of staying in a losing trade forever and adding to the losing trades, which is what you all do. You know it's you. And start doing the opposite. Start staying in your winning trades and following your winning trade as far as you possibly can. And if you want to, dollar cost average your winning trade and add to it. Because it's funny how you'll do it on a losing trade, but you won't do it on a winning trade. Isn't that amazing? You know, think about that just for a moment. So just from me to you, that's how you can start winning. It's the psychology of trading. It's not about the squiggly lines. How many times I've said to you guys, it's not about these lines. It's got nothing to do with this whatsoever. What it's got to do with, I'm just looking at this. It's got to do with, at the end of the day, how you approach the business plan of your trading. Think about this. If you lose 10 trades and you got 1% risk on each trade, you've only lost 10% of your account. The chances of losing 10 trades in a row are pretty slim, and it shouldn't happen. Although it does, it shouldn't happen. The same way you shouldn't win 10 trades in a row. Now, the reason you'll have a good win rate is because you're taking small wins along the way and one big loss. To get a 50-50 win rate, some people have got lower win rates than 50-50, like 30% win rates, but they're hugely profitable because they follow the winning trades, not the losing trades. Get out of the losing trades as soon as you can. Stay in the winning trades as long as possible. And that will help you to become profitable, Mr. Wilson. So, yeah. Watch a couple of my videos. You'll see I harp on it quite often, that it's not about the system, it's about the strategy. And I just gave you a quick rundown on the strategy of how we trade. It's very much about the psychology of trading. It's all about a business plan of trading. It's not about a system. You could use my psychology of trading, my business plan, without having any system whatsoever, by just throwing a dart at the chart and saying I'm going long or I'm going short. It'll work the same way. But at the end of the day, you want to try and get a high probability of it going your direction or winning for you rather than losing for you. So what you tend to do is you tend to look for a system that'll give you an edge in the market, so that when you take those trades, you've got a possibility of winning rather than losing. I'm dying to get a short in here, but I've already got a Japanese yen trade, which if they both go against me, then it becomes painful. Okay, so I hope that makes sense to you, Mr. Wilson. I hope that helps. And just watch a few of my videos over and over again, because I reiterate it over and over and over again, normally at the back end of the video. Just, this is how we trade. The system's great. It's great. Support, resistance, highs, lows, trends, how we trade, everything. But at the end of the day, it's all about the business plan and the psychology of trading. How you approach the trading is the most important thing ever. That's what makes you the money. So, Mr. Wilson, welcome to the community. You will enjoy it here, I hope. I'm enjoying it. It's great. Keep the risk fix. Welcome to our community. Kevin, I was going to mention that too. Please like, as a habit, I like first, then watch. Thank you, guys. I really appreciate our channel's growing immensely, and I'm having fun with the channel. I must say, I'm having a lot of fun with the channel. And now I'm like getting excited about the channel, as excited as I am about my trading. It's almost becoming passionate about it. So it's just fun. I just like seeing things do well. So yeah, we're we've gone over the 8,000 subscribers, 8,200 something. Wouldn't it be nice to go over the 10,000 by the end of Christmas? And maybe next year we look for the 100,000 and become one of those big guys, you know, and we can have a huge community. I'm just enjoying it so much. It's fun. And it's just, it's almost like a game now, and I'm enjoying it. You know, seeing the results. It's great, and it's thanks to you guys. I really appreciate it. And as long as I can give something back to you guys, and I'm showing you how to trade and all that, it's a passion of mine. And now I've kind of got a new passion as well to add to the old one. So it's great. That's a great feeling. It's good fun, man. It's good fun. I love it. Do you trade with your own money, or do you just use money from prop firms? Crafter, quite the thing is I only trade with my own money. I only trade with my own money. This prop firm I took on for you guys just for a bit of fun, okay? Just to see if we could trade our system on a prop firm. That was the only reason we took it. And just to see if it would work and where the pitfalls are, because there was a lot of guys saying, you can't use this system on a prop firm. And you actually can, particularly with this prop firm. So, yeah. There was a problem with it today, and I found this. They've got something going on, fatal error on their thing today. I don't know what's going on. They've picked up a problem with their website, so that's okay. Hopefully it'll come back today and everything will be okay. This is working. I mean, their platform is working, so there's no problem with that. But I haven't heard from them or anything today, but they've obviously picked up an issue. But what I like about these guys, what I've liked about this funded trader markets is their rules are very lax. You can trade over the weekends, and you can trade your own system, and you can take as long as you want and whatnot. But I'm only doing the challenge. I'm not really worried about it further than that. So when you ask me, do I trade with prop firms or my own money? All through time, my own money. I prefer to trade with my own money. The profit's all mine, and I'm not relying on somebody else that might be there today or not, you know, that's got my money. So yeah, after that's I use my own money, totally. Always, if I can. Even if I succeed at this prop firm somewhere down the line, even if I somehow win the challenge, right? And it doesn't look like I'm going to do that right now, but let's say I get an account from these guys and they say, you've got a prop firm thing. It's not going to mean much to me because it's not going to be that much money in it anyway. So I'll still do it just for fun, and I'll do it until it gets shut down or something goes wrong or whatever the case. It's kind of where I am with it. I'm not too concerned about it. I'm just kind of having fun with it at the moment on the side and using it for teaching you guys and training and stuff like that. But when it comes down to it, most of my trading is done on the MetaTrader 5 platform. And the only reason I don't bring it up here is because I don't like to show my bank account details to the world. And unfortunately, my account number shows up on there. And I just don't like it. I'm sorry, guys. I don't like that. So I don't bring it up. And it just feels safer to me because there's so many, I don't know, guys out there just trying to find a way to, I don't know, scam you or whatever the case, and take your money or whatever, get into your bank account, get into your trading account, try and get your dosh. And I'm just very careful with that. And I see a couple of the other big traders are also being careful with it now and covering up and whatnot. Those account numbers are a problem, guys. They stick it on your platform. I mean, great. You know, this TradingView doesn't do that, so that's great. But the other guys actually do. MetaTrader puts your account number like poof, right across the top. Oh, great. Thanks. That's wonderful. Anyway, and they tell you which broker and everything. All they got to do is get a copy of my ID somewhere or something and just contact the broker and go, hey, no, that's me, you know. Yeah, totally. Okay, so how do you know when to get out of losing trades? Okay. I have 2 of my own trades now where my stop loss is in profit. Not a big amount, but who cares? I'm just learning. Actually, Kevin, that's actually excellent, because what you've got there, Kevin, is a situation where the trade is now costing you nothing. Your stop loss is in profit. If it takes it out, you actually make a profit. And that's absolutely amazing, absolutely fantastic stuff. So that's actually good. How do you know when to get out of losing trades? Well, that's the simple basis of stop loss. Okay, what I'm looking at here. So how do I know when to get out of a losing trade? I put my stop loss here because my opinion is that if it reaches this area, my trade is invalid. So I don't actually call it a stop loss. I call it an area of invalidation. In other words, my trade's there. If I walked in today and I wanted to take that trade short, I would be like, no, why would I do that? That means it would be an invalid trade. That's where my stop loss is. But what might happen is this might get to here, right? It might get to this area here, and there might be just a gut feel, and there might be just something in the market that says to me, do you know what, Rob? This trade's over. It's invalid. And I might only be $500 or $600 down or whatever the case, but I'll see that this is now really, it's above the what now is now resistance. It's gone through. It's broken to the upside. There's no money to be taken here. It just looks dead. And I'll be like, okay, I'm out of there, and I'll get out early. And that's how I choose how to get out of a losing trade. Otherwise, I'll leave it and let it take out my stop loss, because I chose before I even took the trade where my $1,000 stop loss would be, and I decided it'll be at that level, and that's how I take the trade. Okay, so then I know 153, that's my area. That's where I say trade's dead. That decision was made long ago. But I might change my mind and get out earlier, depending on the scenario. So that's how I get out of trades, losing trades. Okay, I decide before the trade where the stop loss or the invalidation is, and then during the trade, if it just looks invalid, I'll move on. Okay, so that's how I decide how to get out of a losing trade. Scott, nice, Kevin, stoked. Mr. Wilson will watch them over and over. Please do. There's so many videos there. The later ones are obviously better than the older ones. I'm getting better at this, and that's why I said I'm enjoying it. I'm getting better at it. Okay, how many trades do you have open at any one time, if you don't mind me asking? Kevin, as I say, if I could have 100 trades open at one time, I would. If I could have one trade open at one time, I would. To me, it really doesn't matter. It just depends. If the trades come to me, I take them. But obviously, there's limitations to everything. You know, how much money have you got in the account? How big is the account? How many trades can you take? So on a $100,000 account, I will take a maximum of 15 trades at 15% of my account. And if that goes against me, then that's 15%. Okay, that's kind of what I look at. So yeah, and that's more than enough for me. But normally, you know, that it's so difficult to get 15 trades open at one time. It's so difficult to even get, 10 trades open at one time. So it really isn't a problem. As far as investments go, that's a totally different story. I've got loads of those open, but those are open forever, and I just add to them on a regular basis. But on trading, it's really difficult to get 10 trades open at any one time. So yeah, I don't even worry about that, because I know in most cases I might have 5 or 6, sometimes 3, sometimes 1, sometimes 7. It really doesn't matter. I very seldom go over 10. It's difficult to go over 10 at any one time. Okay. Malters, I forgot we're live today. Okay, here we are. Lado, I took your trade of the day on binary options. Okay. I hope it's not going too badly for you. Okay. What was the trade of the day? Aussie dollar, US dollar. Hey, how's it working? Okay. But it hasn't played out yet. But all right. Did you take the US dollar, Japanese yen? That one will play out. It just needs to come off here and go. That's fine. That one will play out. Yeah, I'm so glad I added to NVIDIA down here at 134. That's brilliant. I love that. That's an investment, though. Don't worry about it. That's a totally different ball game. That's actually a totally different ball game. Scott says, thanks for everything, Rob. Absolute pleasure, Scott. I'm enjoying it, as I say, having fun. So if a trade you were in was consolidating, would you get out? That's actually a difficult question, because consolidation doesn't necessarily mean you need to get out. But okay, if it was consolidating and it was on a Friday afternoon, I'd get out, if that makes sense to you. But if it was consolidating on a Tuesday or a Wednesday, I'd stay in because there's still an opportunity. But it depends how it's consolidating. So, for example, if I was long in a gold trade and it did this to me, I'd be looking at it and thinking, that looks like it could go short. So I would get out. But if I was short on this trade and it was doing this to me, I'd be like, I went short here, it's gone, it's going along here, it looks like a pennant, looks like it might go down, because it always resolves that way. So in that scenario, I'd be like, nah, I'll stay in the trade because it looks like it's going to continue on to the short side. So it just kind of depends on the trade as well. You're looking at your trade and thinking, which way is it going to go? So, it's not a black and white answer. Let's put it that way. It's very much a subjective answer as to, you got to look at your trade. When is it in the week? What kind of trade? What kind of way does it look like it wants to go? Which way is it heading? All those different factors come into play. So, for example, if I went long on the trade here and it did this to me, I might get out. But if I went short on the trade over here and it did this to me, I would stay in. And then also, if it's a Friday afternoon, I'm really going to reconsider my trade because I don't want to sit on the weekend with the possibility of things going pear-shaped for me. Okay. Yes, it won. Anyhow, it was a 30-minute option. Well done, Luno. I have to go. I'm here in Australia. I've been finished night shift, but I'll watch the rest tomorrow morning. Thanks again. Mr. Wilson, thanks for joining, and I'll see you next time. And I'm really glad to have you on board. Hope you subscribed, and make sure you stay with us and watch those videos, man. They'll help you. They will. They absolutely will. Ask anyone on the group. I'm actually enjoying the fact that so many people are getting help from it and getting some information out of it, and it's sending them in the right direction. Remember, it's not about the lines. It's about the psychology behind the trading. Look, we're probably all going to have to go soon because it is that time of the day. So, that's fine. No problem. We shall do that in a bit, but not just yet. Any minute now. Yeah, I know. So, yeah, some of you will trade crypto, some of you will trade shares, and some of you will trade indexes. Like I always say, guys, for those of you that are not investing yet, do yourself a favor, start investing in shares, right? Not on gear trading, on a normal account, on a normal equity account, where it's 1-to-1. Like you got $1,000, you can invest $1,000. And then every month, put a little bit of money in. I don't know how old you guys are, but the younger you are, the better. And just keep on adding to it every single month. If you can afford $500 a month, you can afford $1,000 a month, you can afford $50 a month. Just keep adding to it every single month. How about in the beginning, maybe 5 to 10 shares, and just keep on investing. Just keep putting the money in and don't sell them. Unless you see something going pear-shaped, then sell the whole lot and put it into another better share. Believe me, 10 to 15 years, you'll be so glad you did that. You'll have your pension. You'll be able to stop working if you're working. I noticed Mr. Wilson said he had a night shift. Just do that, and you'll be so glad at the end of the day that you did that, because over time, it'll grow. Don't even worry if the portfolio goes down, if it goes up. Don't worry about it. Over time, it'll go up. It's time in the market, and it'll pay you dividends over time and all kinds of strange things, and you'll just make so much money out of it. It's such a great thing to do. I taught my kids to do it as well. Just keep putting money in, keep putting money in, keep putting money in. Somewhere down the line, you don't have to trade. You don't have to trade at all. I mean, like I said last time, full disclaimer, most of my income comes from the investments, not even from the trading. The investments pay, and they pay big time at the end of the day. But don't trade them gear trading. It's real money, real trading. So 1-to-1, just keep on adding to the portfolio, and it'll just keep on growing and growing and growing. You don't only have to have one portfolio, you can have many. For those of you that are in South Africa, GT247's got the easy equities. It's also with the Capitec Bank and whatnot. You can get hold of them there. And they're so cheap to invest with, and you can invest portions and whatnot. I've left a link for you guys in the description. I don't get paid for it. You do though. I think you get $50 or something. But yeah, it's just a great way to make a living, and it's a great way to make money. You can literally sit and do nothing, and it earns money for you. You just keep on putting money in, keep on putting money in, keep on putting money in every month, and you can have a set amount, and you just add it to different shares that you've got, and don't get too many shares because it sort of thins it out too much. A good portfolio has got 10 shares in it, and you just keep on adding to them. And then if you see one that's going bad, it's not looking good, just move it into another company, and so be it, let it move on. That's it. That's as good as it gets on shares. It's just a bit of advice from me, a little bit of life advice, let's say, and it works. That's the quickest 2 hours of the day. Yeah, I think that's maybe why I do it. It really does. It knocks 2 hours off a day quickly, doesn't it? Yeah, look, let's go back to 1929 and work out if your grandfather had put $10 in the stock market, what it would be worth now. Okay? Even though you have these stock market crashes, take an S&P 500, US 500, okay? Take the chart back 90 years. I can't do it on this chart. There are charts that can do it. I think I could do it on Yahoo maybe, but I'm not going to do that now. And you'll see all the years you'll get the crash, and then else it goes back up, crash, goes back up, and all the way up it goes up, okay? And if you'd bought shares, think of it this way, okay? You're buying shares in a company like Coca-Cola, and inflation makes Coca-Cola become more expensive. The company becomes worth more. So your money goes up with inflation at least. But then to add to your good luck, the company grows and it becomes bigger and it expands and it makes more money and it gets bigger and bigger and bigger all the way through life. You're invested in it. So not only do you get money with inflation, not only do you get paid dividends from that company for the success that it gives you, it also grows immensely and makes you more wealth at the end of the day. Insane, isn't it? Absolutely insane. So just think about that. Not to worry about the crash from 1929. That's irrelevant at the end of the day. What matters is that you made a huge profit over the period of time. So yeah, you do get that scenario. Do you know how you pay tax in the UK on your profits? Well, Kevin, I don't know how you pay tax in the UK on your profits, but I know it's probably similar to us. We have we have capital gains, okay? So our profits are based on capital gains. Sorry about the dogs barking. There's some rubbish going on outside here. But anyway, we have something called capital gains, and we're taxed based on that, and it's calculated in a strange, phenomenal way. It's not like normal earnings and that sort of thing. So you got to work on. I don't know what the UK does, if they have a similar system or whatever the case. It's probably very similar. So you don't pay the same rate as you would pay if you were working for a company or whatever the case. You pay based on an asset gain, so to speak. And it actually works out a little bit less or a little bit cheaper than a normal like income. But also what you got to look at is, you can offset costs and all that sort of thing like any business, office space, all that sort of stuff on it. So look at that. I'm pretty sure in the UK you can do that as well. Offset your office rental, or computers that you need to have for your trading and all the stuff that you need for your business. You're going to offset that one way or another. Medical costs, etc. I mean, every little bit of medical cost on my side gets deducted off against taxes and things like that. So, think about all those things. I know you're probably going to have a similar scenario in the UK, but yes, you're going to have to pay tax on your profits, obviously, because profit's a profit. It's a bit like paying tax on your interest earned and that sort of stuff. It's very similar. Only with trading, obviously, they look at it slightly different because it's trading. Okay. David says everything in shares is time in the market. Yeah. You know, you can trade shares as well. Don't get me wrong. I mean, you can. I started out trading shares in the early days. I only traded shares in the early days on gear trading nogal when it came about. But in the beginning, I used to trade 1-to-1. I used to trade them in and out, buy and sell, buy, sell. And then I learned to just buy them and leave them. But with gear trading, you can also trade them if you want to. And then it's not time in the market. Then you're actually trying to time it. Yeah, well, charge them for your living room, Kevin. My office is my living room. Charge them for your living room, man. Yeah. Warren Buffett taught me a lot about value by just looking at the car he drives. Investment 101, buy and hold. Yeah, buy and hold. That's the investment portfolio. Like I said to you guys, most of my, survival comes from that you invest, you leave it there, it grows, it pays you. Trading is great because it keeps you busy. It's fun. I enjoy it. I love it. It's a bit like this YouTube thing that I'm doing. I love it. I love doing it. And I couldn't just sit and do nothing all day. So, got to do something. So I enjoy doing this. I enjoy trading. You trade in and out, buy and sell, make some profit. It's great. It's good fun. But if you really want to make money, if you really want to be self-sufficient at the end of the day and comfortable, investing is the way to go. In the long run, you'll make all your money with investments. Okay, so just a word of advice from an old man. If you're younger, start right now. Start putting the money in there. Just buy. And then, look, you might want to wait for a little bit of a pullback because your US 500's at the top. But yeah, I'll just say, start buying and just keep on buying, because in 10, 20 years' time, you'll look back and you'll be so happy that you did that. It'll make a big difference to your life. In South Africa, we pay tax on trading, share, Forex, and futures during the longer term investing, 3 years plus. We pay capital gains tax. Yeah. You kind of pay tax on your profits and you work on it. And yeah, your investments, you're going to pay those capital gains. How much higher is the US 500 going to go? Wow, how long is a string, Kevin? Oh, yes, and David, by the way, tax. When it comes to trading and having businesses and things like that, for many years, I've always used a tax consultant because I'm not a tax expert. I'm a trading expert. So I'm a businessman, I'm an entrepreneur, and I'm good at that. But I'm not good at filling in a tax form. So many of my friends would come, you can just fill your tax form online and blah, blah, blah. No, I don't do that. I give my stuff to a tax consultant. They will do it for me because they're experts. It's like, I'm not a doctor. I don't work on myself. If I'm in trouble with the law, I'm not a lawyer. I don't go and defend myself. I employ a lawyer. And that's what I do with tax. I employ a tax consultant. They come to me, and they sort out my tax for me, and they do all those capital gains things and all that stuff and work out the percentages for me and all the rest of it. And they always do good by me. So if I did it myself, I'd probably end up paying through my butt. So yeah, totally use a tax consultant. Just remember that. Okay. If you're not earning that much money, then don't worry about it. Yeah. Kevin says yes. How long's a piece of string? Yeah, no, Kevin. So shall we predict the US 500 just for fun? Okay. So let's all have a bet on it. My bet is it will go to, in the next few months, 6,600. My bet. What do you guys say? I think next year sometime we'll see 6,600. I don't know if by the end of the year, during the year, I definitely think we're going to see 6,600. Maybe 6,650. Definitely. This month, maybe 6,200. Who knows? If it doesn't turn around and go down. How high can it go? If you want to see how high it can go in the short term, do that. Okay. There's your height, 6,200. Kevin, see it there? So just take a line, draw it over there. That's your height, 6,150 to 6,200. That's where it can go to right now. So I'd say this month could even reach 6,200. Next year, I'm betting about 6,600. Okay, there you go. That's how long your piece of string is. Hope you guys enjoyed that. Right, so time to go. I think it's time to move on. We've got to go. It's really late, and it's been fun. I've just kind of got into this, and it's already a couple of hours. So let me head on and be on the way. Fibonacci is an excellent product to use, and I love using Fibonacci. I must actually do another video on Fibonacci for you guys. I've traded with Fibonacci before. Very similar to support and resistance, by the way. It's just the numbers of the world, Fibonacci. I'll try and explain to you what it all means next time, because I'm going to go now. So let's all go, and thank you for watching, guys. Thanks so much, and I'll see you guys soon. Tomorrow's Friday already. Goodness me. Do enjoy the video tomorrow. Do enjoy the video on the weekend, which I'll do the rundown, and I'll see you next week for the live shows again. Guys, thanks for being with me. I hope I've helped, and I hope we are getting somewhere.